Hello, thank you very much for watching our videos on our Eric Merritt Sells AZ Real Estate YouTube channel of HomeSmart. This video will give you a very clear understanding of where closing costs come from and which ones you do have control over. So if you find this information and this material very useful in this video, please go ahead and hit that like and subscribe button and share our videos, and you will be notified of future ones as well. Please share it with your friends, and thank you very much, and we'll get this video started. Important facts to know about obtaining a loan and understanding closing costs. Most of us are focused only on the interest rate, and we forget or take for granted what the closing costs are. Number 2. The majority of consumers buyers believe that the amount of closing costs are what they are, and I guess I have to pay for it and cannot be shopped, which is not true. You do have a choice. Even those that feel that they are lucky enough to even be approved for a loan or do not pay attention to the closing costs will pay or get under contract and close, and then whatever the lender is charging you, you're going to have to pay for it. So it's very good to know what the closing costs are going into. Use an example before going into getting under contract on an actual home. Know what you're getting into, because you do have a choice. I have a client that was back in January that was approved for $225 with a lender with another realtor, but the qualifying amount was kind of low, and the closing cost for down payment assistance included was almost $8,000. I knew that was too high, so I got him to my lender out in Peoria, Hometown Lenders, and I knew that we could get the closing costs down. He lowered it by $3,000, and he also qualified for $50,000 more. So that was quite an achievement. So based on that, he would have never gotten a brand new home down in Anthem Mail Ranch if it wasn't for my lender. So it makes, and then also the closing costs got paid for. That's another story. Or most of it got paid for with D.R. Horton because they offered $6,000 in closing costs. So that's an example of, if someone's going from way too much in closing costs, and then they're also getting it lower by $3,000 and getting a higher qualifying amount, $50,000 more, that makes a very big difference. Explanation of closing costs. Here is a breakdown of closing costs from a lender. So this is a big mortgage banker, which I won't name the name of the company, and the small mortgage banker. They all have origination fees. They're in business to make money and make a profit too, just like us realtors are, title companies, etc. Anyone that involves real estate is there to make money. But we also need to know what is fair and what is good for us as consumers, and that is fair for them to make. So this is what I wanted to talk about here. Typically, big mortgage bankers are going to have not only just the origination fee, they're going to have the processing fee, document prep fee, underwriting fees. Those are what I call junk fees. Appraisal, everyone has to pay for. They're about $400 and up, depending on the square footage of the home and the dollar amount of the home, purchase amount. Credit reports, $40, $35. It's pretty much standard across the board. Those that need down payment assistance will have higher closing costs than those that put their down payment at the table on an FHA loan. So down payment assistance, that comes from the government agencies, so that fee has to be collected to the government agencies. The lenders don't make money on that. Closing costs are number 2. Closing costs are typically 2 to 3% of the sales price, whether it is FHA, VA, or conventional. Sometimes a very good lender, mortgage broker, or banker will have very low closing costs. And the lender that I normally use has closing costs under 2% or less. I always look for lenders that have low to acceptable closing costs, the lowest interest rates, and acceptable time to close. There's examples that we're going to go into in the next part of the presentation. The main lender that I use did a VA loan for me back in January of 2019 for $450,000, and the listing agent and I were looking at what the estimated closing costs were. Our calculators in our phone from these title companies that we have was about $12,000 to $13,000. My lender came back and said the closing costs are going to be just over $5,000. I didn't believe it. We both shook our head like, wow. can't be true. Well, when it actually closed, it was just over $5,000. So you're going to see that in the example. So the next part is we're going to talk about, oh, okay. So this is an example of a lender here, caution, know what the closing costs are going in. And then these are there's actually 7 components, factors that are variables in obtaining a loan. Credit score, obviously. Qualifying amount for home purchase, so that is based on your debt to income ratio and your income, of course. Closing costs, time needed to close, down payment, what are you going to put down, 3.5% FHA, 5% standard conventional, or you're doing 20% conventional because you're taking money from another house, equity from another house, and then you don't have to pay the primary mortgage insurance. On FHA loans, it's called mortgage insurance premium. It's both the same thing. And then the interest rate. So you've got credit score, closing costs, time needed to close, qualifying purchase amount, and then you have interest rate, down payment, debt to income ratio. So we're going to go into all of these components will affect what your home is going to be. Now, we're going to have a video on debt to income ratio separately by itself, but the next part of the presentation of this video, we're going to go into 4 actual examples that I did have. 2 are FHA, 1's conventional, and 1's VA, and you will see what the closing costs were as a percentage based on what the sales price purchase amount was. Okay, this is our second part of our video about closing costs. These are 4 different examples of settlement statements, actual settlement statements. Their private information is not there, and calculating closing costs. So the first one is an FHA loan, FHA purchase at $303,000. So if you go over here, here is the down payments, okay, and then the loan amount is right here, $297,511. But on all FHA loans, there is a 1.75% of mortgage insurance premium charge up front, and this did get tacked in here. So if you subtract these 2 numbers from 303, it's going to come up to 292 and change. When you add this 5,116.91, it comes up to this number. So that's the first thing. Second thing, here is the county taxes. So when the new buyer, if people have paid, okay, so the seller or the buyer here, there's $601.60. County taxes, a seller credit. So the seller credit here is closing costs. So that's seller concessions. Today, that's very, very hard to get, but just a year and a half ago, you could get it. Let's see here, prepaid interest. So you got appraisal fee in here. That was paid before the close of escrow from the buyer. Flood certification, $8. And then we got tax service, $85. This $81.81 and $55 broker fee to Barrett Financial, that is coming from, they're a mortgage broker, so they would be paid from United Wholesale Mortgage. That $8,000, that $81.81, where is it? Oh, right here. This $81.81 has nothing to do with this. If you subtract these 2 numbers from 303 and you add 5,116.91, it comes up to that number, which I said already before. Homeowners insurance. All lenders are going to require homeowners insurance be paid for a year up front. So this is 3 months here in this case. County property taxes. So 5 months. County property taxes here at $544.60. So what that means is the buyer has to pay for those 5 months because the seller probably already paid for those. Now we're going to the next one. These are title fees, $870 for the title lender's policy, extended lender's policy to First American title insurance company. And then there's these $100 charges. And then you've got closing protection, $25, title escrow fee, $509. Those are title fees that go to the title company. And then here's the realtor commissions here, the listing agent, and these are variable commissions. The listing agent actually was only 2%, now it's 2.5%. Recorded, these are the recording stuff to the government, to the government. Those you can't really do much about. Okay, here is the year policy that is paid for up front. Homeowners insurance premium to Nationwide Insurance, $993.89. The reason they want to collect a year up front is because if something happens to the buyer and they lose their job or something happens and they don't make payments, then the home is still covered under insurance. So the lender, if the buyer stopped paying, then the insurance would stop, obviously. So that's why there's an escrow account to where every 6 months property taxes will be taken out of the escrow account and be paid to the county, wherever it's at, and then the insurance will be paid yearly in advance. So that is to protect the lender. And then homeowners insurance, if you have extra coverage beyond what the lender is getting, so you're part of the down payment and whatever furnishings you want to take care of. And if you need to be, like if something happened to your home and it caught on fire, then homeowners insurance will pay for a place for you to stay, a temporary place, like a hotel room or something like that. So all that is figured in. So in this case, here's the purchase price, $303,000. The closing costs were $39.6928. This is without the mortgage insurance premium. So when we got the seller concessions, $3,000, my clients only had to come up with $969 at the closing table. If you add the mortgage insurance premium, it's $9,086. But when you have an FHA loan, most people, when they're financing, they will put the mortgage insurance premium and add it on the back of the loan. So actual closing costs to the table were this here. So if you want to base it on a percentage, it was 1.31%. And if you did pay for the mortgage insurance premium out of pocket, it is 2.99%. Next example, FHA loan at $335 purchase price. So this one had a big wire of almost $150,000. They put $3,000 earnest money deposit, and then they financed $188,237. And then there's association dues here, county taxes, loan charges, prepaid interest. So prepaid based on the interest of the loan of from the other lender. You have to pay the prepaids, and then you have appraisal fee. This was paid for by the buyer while under contract. Mortgage insurance premium, $3237.50. This client just happened to pay for it cash out of pocket. So so it's added in as closing costs. So it wasn't tacked on to the back of the loan right here. And then here's a broker fee of $5,176.52. So this was more than likely paid from the lender, from the lending institution that paid the broker. Homeowners insurance, $141.33, probably from the seller. County property taxes, $534.72. So these are fees that you can't do much about because this has nothing to do with the lender. Okay, title policy here, 671, 100, 100, 125, 528. Those are all title fees. And then you've got recording fee to Quicken Loans, total accumulated payoff statement to Quicken Loans. Those are probably from the seller. And then in this case here is this one. Purchase price $335, closing costs for $3759.52 without the mortgage insurance premium, $6,997.02. If you go from $341.97 and then you go back to $335, it comes up to exactly $6,997.02. So with that included, it's only 2.1%. And then here's a conventional example. Sales price was $299,800, just under $300,000. $4,000 earnest money deposit. Loan amount $149,800. They did a 15-year loan, so that saved a lot of interest in the long run. Association dues, you have county taxes, loan charges to hometown lenders, processing fee, this is it, origination fee is what it is. $722 for the points, so he probably lowered his interest rate. So for when you want to lower your interest rate based on what the current market, what the going market rate is at that time, you're going to have to pay for that. So that's an extra cost. Flood certification, $14. Homeowners insurance, this is probably from the seller, that now the buyer has to pay for, $145.44 county property taxes. And then you've got the title fees here, $572, $100, $100, $25, $505 escrow fee to set up the escrow account. Okay. And then you've got the payoff going to from the seller. The seller has to pay that off. And these other charges. I'm going to keep going down here. Working capital Solaire Ranch, that's probably that's the name of the subdivision. So these are like HOA fees, basically. Homeowners insurance premium to Allstate, this is for an entire year. And then this is a full year of property taxes. So this is paid out of closing, $1,538.60. So in this case, what you're going to have is $4,913.84. The closing cost percentage was 1.64%. So it was under 2% for that example. And then here is the VA loan, VA purchase. This was in January of 2019. Turn my phone off here. Okay, so the loan origination fees $12.95, flood certification $14, and then you've got the title fees right here, $25, $100, $11.04, $200, and $6.05. Those are the title fees. And then you've got prepaids, homeowners insurance premium for 1 year, 12 months. See, prepaid interest $117.12. Homeowners insurance, this is probably from the seller paid for it already, so now the buyer has to pay for the part that the seller's already paid for, so now the buyer has to pay that. That's what these, the property taxes are the same thing. And then you have the other, so you have the commissions here. I'm thinking I'm turning my phone off. You've got owner's title insurance, $18.68. You have septic inspection, $225. So the seller is going to be netting from $450 is netting $422. So the seller is netting $422,588, and then the buyer's closing costs are going to be. So the buyer's earnest money deposit's right here. So the closing cost total is $5229.93. So $5229.93 divided by 450,000 comes up to only 1.16. So remember that example I talked about? We thought it was going to be 13,000. Well, here it is. It was $5229.93 on only 450,000. That is extremely low for closing costs at that dollar amount. So that is the second part of the video, and we're going to go to the conclusion next. Here's the conclusion of our presentation about closing costs. Closing costs explained and their examples. I hope this will give you more of an idea of where closing costs come from and the part of them, so that now that you can understand them and be in control. The title and escrow fees vary very little from one title company to another. Also, impounds such as property taxes and homeowners insurance are paid out of your escrow account. Flood certificate recording fees with your county do not vary too much, and they're fees that all closings have. So those things you don't have any control over. All FHA loans have an MIP mortgage insurance premium charged upfront, 1.75%, that is usually tacked onto the back end of the loan balance. These most of the time are added on the back of the loan, but it can be paid at close of escrow, which I showed you in example number 2. So the takes of this video are to actually provide you with enough information to know where the closing costs are coming from, what you can control in closing costs, and the things like impounds, like when you buy a home and the seller is selling, then you're going to have to pay whatever property taxes they paid, so they're going to be credited back those property taxes because they're not going to be owning the property, right? So let's say in 6 months, and then you buy it in the middle of that 6 months, so 3 months you would pay for it, the seller would get credited back those 3 months. Same with homeowners insurance if they paid it, which that's what that's for. And then at the other side, the buyer, you, will have to pay for a full year of homeowners insurance up front, so the lender is protected in case anything goes wrong with the house. Buyer stops paying, or a fire happens or something like that, the lender wants to make sure that their investment is protected, and that's why escrow accounts are set up to take care of that. So escrow, this is an escrow like a piggy bank. So the money is flowing out of that, and then it goes to the homeowner's insurance, one goes to property taxes. So I hope this video has given you more enlightenment as to what's happening. And if you have a very good realtor that understands that, that's very good. And if you are not represented by a realtor, I would like to be your realtor of choice, and I can help you with these things. But I think everyone should understand what's going on and know that you can't control your closing costs. So please like and subscribe and share our video, and you will be notified of future ones as well. Thank you.